Last week, the Federal Reserve pushed interest rates to a 22-year high after a brief pause. The upper bound is 5.5%, which is the highest since 2001. And we can go to a TradingView chart and check that fact. And it's indeed true. The upper bound has not been this high since 2001. And I think that is fascinating. In my opinion, it's fascinating. What is crazy is that Powell does not forecast a recession. Okay, well, what can we observe? Every time we had an interest rate hiking cycle, we had a recession. So we had a hiking cycle until 2006. Recession came like 2 years later, call it 1 or 2 years later. 2001 recession, we had a hiking cycle starting in 99. We had a recession eventually. Early 90s, we had a hiking cycle. We had the recession in 1990. So I don't know what's this all about, because there are a lot of indicators that are forecasting a recession, but not the Fed, apparently. Not the Fed. One of the most reliable indicators that is forecasting a recession usually is the yield curve. So basically, when the yield curve is inverted in 12 to 24 months, we're gonna have a recession. So it what does the yield curve inversion mean? Well, it means that the treasury yield on a 2-year treasury, or on a 1-year treasury, or on a 3-month treasury is higher than the 10-year, and that's not healthy. All right, because if you think about it, if you lend money for a longer period, you are expecting a higher interest rate. But right now, that is inverted. So this inverted back in July, like one year ago, and it's still heavily inverted. As you can see, the 2-year yield is higher than the 10-year with 91 basis points, right? So the forecast here would be that this will eventually go back to positive, uninvert. And when it uninverts, that's when you get the recession. If you go back to the global financial crisis, you can see that it inverted the first time in 2006, went back to positive, and then it started to go back to negative. And it wasn't even that bad. It was like only 0.2% inversion. But right when it started to uninvert, like this is May or June of 07, we didn't get the recession until like September, something like that, September, October. So when this chart goes back up, that's when we have a recession. And that's until then, we're not gonna have any recession. There's not gonna be, most likely, there's not gonna be any market crash. But we are already 12 months inverted. I would say that in maximum 12 months, we're gonna get a recession. This has a success prediction rate of almost 100%. Like if you go back in time, I mean, it doesn't show up here in TradingView, but you can find the charts on Google. With the exception of, I think, 1966, like every time this curve was inverted, we had a recession. And keep in mind that in 1996, GDP still dropped from, I think, real GDP from something like 5% to 0.3%. So you didn't have negative GDP, but unemployment still went up a bit and GDP fell a lot. So it wasn't, technically it wasn't a recession, but it was lower growth. All right, so the Fed does not forecast any recession, and they also say they are going to raise one more time. Let's see what the market believes. This is the CME Fed Watch tool. It calculates the probabilities. Next meeting is in 20th of September. And there's an 80% chance they will not hike rates. So what the Fed thinks they're gonna do is they will raise again in November. The market has like a 70% probability that they will not raise. We can go to a table to see a lot more of this. The market does not foresee any rate hikes. In fact, from, call it January, is it January? No, and this is May. From May of 2024, the highest probability is that they will start cutting rates. And May is like almost 1 year from now, 12 months, maybe the curve will start to uninvert. And that means something bad is happening in the economy or in the stock market, and the Fed will start reacting with interest rate cuts. So what I'm personally doing, I'm stacking some cash because I want to, I do not want to miss the opportunity of market crash. Right now, as you know, the market is back to like all-time highs, and this is a pretty bad time to buy, in my opinion. This was a good time to buy. I didn't buy because it's still overvalued, but looking back, it was a good time to buy. I bought individual stocks, and of course I'm always a buyer of gold and silver. That's something everyone should own, like 10 or 20% of your portfolio. I would start with 10. Buy physical silver. It's just insurance. It's not really an investment. It's insurance. All right, so that was it for today. I hope you learned something, and I'll see you in the next video. Bye for now.